right, glad to have you guys back on. Glad to have you guys. I'm super delighted to be here with you guys. So let's get on with today's class. So today is going to be an exciting class, guys. We're going to be talking about this is going to be the third part of market structure. We've given a training about part one and part two. So if you have missed any of the training on how market structure works, so guys, you have the record, you have the replay on our YouTube channel right here. So make sure you feel free type in market structure part one or part two. So I advise you to start from part one, so that from there you can be able to learn from the beginning. All right, you can be able to learn from the beginning. So today uh, is the part three of market structure. So we're still going to part five. All right, but believe me, what I'm going to be sharing with you today is something every trader needs to learn. All right, you really want to know how to take a trade when you're taking a trade with a market structure. So it is important for those of you who have missed one of the two classes. So let me quickly run a quick drawing for us so that we can be able to catch up from where we stopped the last time. All right, we talked about how market moves. In the case, the first thing you want to look at, guys, is you want to be able to see a movement in one direction. So let's talk about a downtrend right now. So you want to be able to see a drop. All right, so when you see a drop, the next thing you want to see is a retracement. So with that in mind, with this movement alone, we cannot say this is a downtrend. All right, we cannot confirm this as a downtrend until we see a break of structure. So how can we recognize a break of structure and the area where we have to go in for a sell? All right, now to recognize the break of structure, you want to see this level being taken out. What do I mean by that? You want to see this level being broken with another move. All right, this move right here must be able to come down and break this level. So from there, you can actually confirm that, okay, this is actually a downtrend move. Until this level get broken, you can never ever confirm that this is a downtrend. All right, until this level get broken, you can never ever confirm that this is a downtrend. Okay, so once you have this structure, the next thing you want to see is that you want to see another pullback. All right, you want to see another pullback. So when you see a pullback, you cannot also confirm that this is going to keep going down. You can't confirm that this is going to keep going down until this next level get broken. That is one thing you want to start looking out for in a trend. All right, and it does not matter how long or far this is going to travel. All right, if you see it this way or it's as short as this, it does not really matter. The only thing you want to be sure is that this level gets taken out, which means the continuation move breaks this level. All right, I hope this is very clear. If you guys are following me, please type in one in the chat. Okay, the same way we get this level broken. So that is one thing you want to start out for in a trend. All right, but the only thing we'll be talking about today is how can you spot entry with that. How can you be able to take an entry with this? All right, that is one of the challenges a lot of people are facing. One of the challenges a lot of people are facing is that they recognize when the trend is moving, and they also recognize when the trend is ready to reverse. But the only challenge a lot of people are facing is that, okay, how can they be sure that, okay, this is the right place to enter? And we have several tools that we can use to determine the entry. And one of the best tools to use with this is to use Fibonacci retracements. Everybody type in Fibonacci. If you've heard about it, type in Fibonacci. Fibonacci is one of the best tools we'll be talking about today. This is going to be the continuation of what we'll be talking about in the last 3 weeks. All right. So Fibonacci is what we are going to be using to pick the right entry. All right. And how can you be sure which of the Fibonacci ratios price is going to get to before it reverses? Now, according to this move, we understand that when market goes back, that is when we want to take our trade. When it pulls back, that is when we want to take our trade. But how can we be sure how far this is going to travel? We never know if this is going to be as short as this or it's going to be as long as this. We can never ever tell. But we can be able to determine how far this is going to travel through the help of Fibonacci. I hope that is very, very clear, guys. We can only do that. And today I'll be sharing with you how to be able to spot the right entry with Fibonacci retracements. Okay? So that is it, guys. Now, with this, let's talk about this move right here. You want to, like I said, you want to be able to spot an area around this place. And what levels to look out for? The strongest level in Fibonacci is 61.8%. Everybody type in 61.8. The strongest level you can look out for is 61.8 Fibonacci retracement. Everybody type in 61.8. The strongest level, I take it again, the strongest level of Fibonacci is 1.8 Fibonacci retracement. All right. We have several levels. We have 50%, we have 38.2, we have 88.6, we have 73.2, but the strongest among these levels is 61.8. And 61.8 is most of the time is where a lot of people are looking how to take the trade. Now, you will agree with me, and based on my few years experience in this industry, when we have huge number of people targeting an area, it's going to have some impact in the market. Apart from having the institutions, the big banks, and the big players coming in at a particular time, there are several retail traders targeting an area, and 61.8 Fibonacci retracement is one of the best areas people are targeting when it comes to Fibonacci retracement. All right, so 61.8 is one of the areas you want to always consider, and the next one is going to be 50%. All right, now we're going to go into our chart to share more about this. All right, so that can make a lot of sense. Then I can be able to show you how to pick a trade with that. And in our next lesson, we will imagine this with some trend line, but we're not going to go deeper with that. All right, we will imagine this with some trend line. Now look at this, guys. I said earlier on that the next thing you want to see when it comes to market structure is a move. Okay, this is a move, then a retracement. This is a retracement. According to this retracement, let's assume this is where market is right now, where I'm having my mouse right now. That is where market is. Let's assume like that. Can you ever say market is going down with this move alone? With this move, market comes down, went back up to this level. Can you say you are convinced that market is down with this move alone? No, you can never ever say that. It is only when this level get broken, that is when you can say, okay, you are convinced that market is on another phase. Market has presented another phase of structure. All right. So with this in mind, you want to see another move, and it does not really matter how far or how long it's going to go. All right. So now you can see with this in mind, you can see we have the break of structure. All right. So now the level has been taken out. This level has been taken out. So by having this level taken out, it's a confirmation to a lot of traders, okay, even thousands of traders, that this is now on a downtrend. So with that in mind now, the next thing a trader wants to start looking out for is the retracement. All right, the retracement. So the retracement from the beginning where we have the drop back up. So we never can tell if this is going to come to this place, or it's going to go up, it's going to go up as far as this. No, we never can tell. So that is when the work of Fibonacci comes in. Like I said, Fibonacci is a great tool, and it will continue to be a great tool for a lot of people that are using it. All right. So now, with that in mind, look at this is a retracement. From there, we have another big move to the downside until this level. Look at this level until this plate get taken out, get broken. That is when we can say, okay, by having this place being broken, it's another confirmation that we are still heading down. Now, someone was asking me a question some times ago, that what if this place, okay, this place get taken out, get broken right there, this place get broken, and market comes up to this level, and it does not even come back to break this place. If it does not come back, fine. And if it does not come back to break this place, that tells you that you need to be careful with the next sell trade you want to take. Okay? Because right from here, if this place does not get broken, it tells you and I that market may continue going up. All right? So if you have taken a trade right here, the next profit target you're going to get is going to be the first profit target is going to be this level, right? Should, in case market comes to this place and it does not break this level, then you can take some profit before market reverses. Okay, these are the kind of structure you are going to see in the market when market is not ready to continue to push down or to the upside. I hope this is very, very clear. So let's go back to where we're talking, what we are discussing. So I still will get on this one shortly. Then I'm going to look out for an instance so we can talk more about that. Now we have a structure, right? This structure has been broken. So it's another confirmation that we are still going down. Now with that, you can see another pullback. Okay, with this again, this level has been taken out, another big push down. So each time market keep breaking structure, it keeps moving down. Look at this place get taken out, another move right here. So you will agree with me that the next move we are going to get is for market to come down. Okay, if ever market is ready to pull down, because we already have the pullback right here. So we never can tell how far this pullback is going to go. Look at, guys, we never can tell how far this pullback is going to go. Either it's going to stop right from here and reverse, or it's going to go up a little bit more. We can never ever tell. So that is when the work of Fibonacci comes into place. And a lot of people are using Fibonacci wrongly. And I will prove that to you tonight. Why a lot of people are using it wrongly. All right. Now look at how can you be able to determine this level. Let's start from the beginning so that it can make some sense to a lot of you guys. Now this is the move. It's when market pull back and it came down. With this move alone to this place, we can never, you cannot say this is a downtrend until it get broken. And we have seen the structure has been broken right here. Now, since I see the structure, I want to plot my Fibonacci to be able to know how far market is going to return. Now, I want to be able to plot my Fibonacci, then draw from beginning, okay, beginning of the move, which is this place, okay, then down to where the trend ended. All right. Now, with that in mind, you drop it. Once you drop it, you want to start looking out for 61.8% level. And as a matter of fact, this level right here, this is 61.8% level. This is 50% level. Let me try to extend this so that you guys can see it very well. You can see the number very well. Okay, I hope this is clear now, guys. So I want you to be able to see the numbers very well. So you want to wait for the retracement to happen for price to come into 50% level or 61.8% level. And there are times where market will go up as far as 78.6. I said it earlier on. But the golden area, you want to start looking out for price to reverse and continue its trend is around 61.8% level. And you agree with me that market went into that level and reverses. Guys, if you are following me, type into in the chat. If what I'm sharing with you is making some sense, please type into in the chat. I want to be sure you guys, you're following. Type into in the chat if what I'm sharing with you is making some sense. Okay, still waiting for other responses. Type into in the chat if you're following and what I'm sharing with you is making some sense. Type into in the chat, guys. Okay, let's keep moving. Let's keep moving. That's fine. Thank you so much for your response. I want to be sure you guys are with me. So 61.8% is the golden area. So you want to be able to plot the horizontal line on 61.8 and 50% level. So in our next lesson, I'm going to share more information with you on this because our Sunday training is capped 1 hour, okay? And we've been trying as much as possible not to take a lot of your time and not to spend more than that 1 hour. So now, guys, for you to start looking out for this, you want to see once price starts pushing back up, okay? So don't get confused here, please. Let me try to take it once again. Once you see that this level get broken, okay, this level get broken with a big move like this, okay, this move, oops, this move has broken this level. Now, it's a confirmation to you and I that price is ready to keep going down, but it won't go in just yet. So how can we start looking out for the Fibonacci area until we see a small move? Okay, until we see a small move that market is now going back up. We already know that this level has been broken. Don't forget, we already know that this level has been broken, but we never can tell if this is going to keep extending. But since we see that we've seen a move up, that market is already reversing, then the moment you see that market is already reversing to the upside, we immediately you want to plot your Fibonacci retracement. Okay, that is when you want to draw your Fibonacci retracement. So and start looking out for price to travel up to 61.8% level. All right. Sometimes you may see that price may not even touch the 61.8% level. All right, exactly. But it may rest somewhere here between 50 and 61.8% level. So that is the area you want to start looking out for your trade. So let me take this away. So we already know where the 61.8, so that it can be clear to a lot of you guys. So now this area is known as the golden area between 50 and 61.8. So once you take your trade, let's for example, you are taking your trade on 61.8, which is this area. You have taken your trade right here. Your stop loss is going to be above the last high. Don't get it twisted, guys. Your stop loss is going to be above here, probably like 4 or 5 pips above, maybe about 4 or 5 pips above. All right. So if you are taking a trade right here, your next target, which is going to be your first target, is going to be at the last low. This is the last low. This is the low that broke this low. All right. This is the low that broke this low. So your next first take profit is going to be at this low. I hope you understand. So in most cases, you are going to get ratio 1 to 3, ratio 1 to 2, ratio 1 to 4 or more, depending on how high the last high is on that particular chart. I hope this is clear, guys. If this is clear to you guys, please type in clear in the chat. If this explanation is clear to you, type in clear in the chat and put in any question if you have any. All right, super excited that this is very clear to you guys. See, guys, this is a very simple way of trading. Believe me, this information I'm sharing with you, it works on any chart. But the only challenge a lot of people, most especially the new traders, have is that once they take a trade with a system or with a particular trading pattern, it does not work. The only thing they will do is that to drop it and look for something else. You don't want to become a master of all. Become a master of one and be good at it. I tell you guys that, and I tell all our students that for you to become a good trader, you must understand how trend works. The moment you start to understand how trend works and how trend moves, believe me, your trading will start changing right from that spot. I tell people this is the beginning of trading. When you don't know what I'm sharing with you, how to be able to spot a trend, you are going nowhere. This is not a joke and it's not a cause. That is just the reality. So now, guys, so once you have this, you already know the area price is ready to return. Then that is the area you want to start looking out for your trade. Then write the trade to the downside. Once you have your first take profit right here as this target, then you can just say, okay, you want to pick your next profits anywhere below this one. You've already made a good money between this place and this place. You've already made a good money. Then you can say your next profit is going to be anywhere below. Or you may say your next profit is going to be, your second profit is going to be the distance between here and here multiplied by 2. Let's say we have 100 pips right here. Okay, 100 pips is your first take profit. So your second take profit, you may decide to take 200 pips as your second take profit. And look at this, is a massive profit. Now let's continue with that. Can I clear all of these, guys? I need to show you more. Can I clear all of this? If I have to clear it, please type in yes in the chat. You may want to take some snapshots. Go ahead and do that right about now. So I'm going to clear everything out. Okay, good. So let's clear this out. This is another move. Okay, we've seen a break of structure right here. Markets went back to this place. So you want to be able to pick it from the last high. Look at this is the last high. You want to be able to draw it from the last high to the last low. Look at a very uh simple way of trading. But sometimes you need to take note that markets may not even get to that level. So you don't fight the market. Nothing is 100% in the world of trading. Nothing is 100%. But I'm sharing the reality of the market with you now. So you want to be able to harness that opportunity to know what you need to look out for. Now, in this instance right now, guys, look at this. We have a structure, a break of structure right here. This move came down, broke this level. Let me try to draw it out. This move came down, broke this level, but this failed to touch either 50% level or 61.8% level. Look at, before it reverses. Look at, it failed to touch 50% level or 61.8 level. So you don't fight it, guys. Once it happens like that, just let it go. You never can tell. Market may decide to come here like this, okay, and give you something like this, come to 61.8% level, then reverse. So if you had taken the trade hurriedly right here, although it went down a little bit, which means you should have, protected your profit. So if you have already taken the trade right here without it coming to 50% level or 61.8%, and market reverses back up, it will now eat you out in stop loss. This is one of the things that happen in the market, why a lot of people, most especially the newbies, the impatient one, will keep losing money in the market. All right. Sometimes you have a structure like this, where market will come down a little bit, then the next thing you see is that it will pull up either to come to 50% level or 61.8% level. And sometimes it will even travel to 78.2. So you don't fight it. Just let market play out. So if you are taking a trade right at 61.8% level and market shoots up to eat you out in stop loss, you take it like that. It will happen like that once in a while. But believe me, 7 out of 10 of the time, this will work. So you take 10 trades, you are most likely going to win 7 out of 10. And each of the trade that is going to go in your favor is going to give you at least ratio 1 to 2, ratio 1 to 3. Minimum is going to be ratio 1 to 2. In fact, it's going to be even more than ratio 1 to 2. Ratio 1 to 3 is going to be the minimum. So guys, now let's go back to business. This is the move. This move has come down to break this structure, but this level failed to come to either 61.8 or 50.0 as the minimum level we are looking out for. Okay, so since that has happened, let's take the fib off. Since that has happened and another move has come down and it has broken this move, so this tells us that, see, once this move has been broken, then we should start looking out for this area to take a trade. The moment this level get broken, don't forget, then this tells us that, market is now going down. So we want to look out for Fibonacci 61.8% level or 50% level of this move. Okay, now let's take a fib. I'm going to share a top secret with you guys today. I just want to give these secrets to on this free training, and I'm going to I pledge I'm going to release that to you right about now. What you need to look out for to be sure that this is going to reverse either on 50% or 60% level or 61.8%. I beg your pardon. Now with this move, we have the fib drawn from the top. This is the last eye. You want to take it from the last eye, draw it down. This is 50% level. We have 50% retracement level right here, which is where market is right now. Look at 61.8, which is where we are expecting market to travel to. Now you can see market is already at 50% level and is already reacting to that level, trying to show that it's going to drop. Guys, are you seeing what I'm seeing right now? You can see market is trying to react to 50% level. So 50 and 61.8% level is an area of target for a lot of people. Now look at this. It's already at 50% level. Then we are ready to take a sell trade. We are ready to take a sell trade. But believe me, guys, for me, I may not take the trade. This is the secret I want to share with you right now. I may not take this trade right here. Reason is simply because I want to be sure that this area is valid, is a valid area. Fine, it's a valid area in the sense that it has come to 50% Fibonacci level. All right, it has come to that level. But I want to look for more confluence, something that tells me that, see, this is truly a valid area. Because sometimes you may see market may come to this level as it is right now, then it will come like this, just the same way I tried to show, I explained to you a few minutes ago. It may come down a little bit like this. Remember, if you have taken a trade right here, then the next thing you will see is that market will pull up and take you out of stop loss. Then before it continues pulling down. So market may come down like this and reverse to this level, or try to even go as far as 78.6 before the retracement, before the continuation continues. Now, this area, we have price reacting to 50% Fibonacci retracement area. With this area, there is one thing I want to be sure that tells me that this is ready to reverse, is truly ready to reverse. What is this? Is the rule, guys. This is the secret. The next thing you want to see is that go to like 5 minutes, either 5 minutes or 15 minutes. Either 5 minutes or 15 minutes. Remember, this is the area of Fibonacci level. Let me try to take this fib away. This level is the 50% level. Before price approaches this level, guys, please pay attention to this thing. This is one of the top secrets I want to share with you. I share this with all our paid members time to time and much more. But we are giving this for free and we'll keep giving something valuable. Believe me, and I trust you guys, you will really enjoy it. For me, as a trader, and I may not decide to take this trade. Reason is that before price approaches this level, which is 50% level, I want to see slow movements of price. I think I've shared some of the informations with that on one of our YouTube videos we released last week or something. You want to see market in a slow pace like this, slow pace, okay, moving slowly towards that level, moving slowly towards that level, okay, moving slowly towards this level. You want to be able to see a reversal pattern around this area. Reversal pattern in the sense that you want to be able to see descending channel. Sorry, ascending channel. So you want to be able to see ascending channel approaching 50% level before you can say, okay, this is another confirmation that price is ready to reverse. Okay, this is a reversal pattern. So these are the kind of things you want to look out for around this area. Okay, but when you are seeing a sharp movement like this is a confirmation to us, to me, and it's another confirmation to you that, see, this is most likely not going to be respected. Although we may see price pull back a little bit like this, but believe me, it's going to push up more. Most of the time, it's going to push up more because there is no reversal pattern around this area. The only way we have the pattern is a pattern like this. Okay, does this pattern look like what I drew right here? You want to see a pattern like this around the 50% level or 61.8% level. So when you see a pattern like this formed around the 50% level, it tells you that, it gives you another confirmation that price is going to respect 50% level. All right, but if it does not happen and you see that it appears around 61.8% level, that is another confirmation that price is ready to respect that level. It's as simple as that. That is one of the golden secrets I'm sharing with you. Apply this on any chart. This works. Believe me, 85% to 90% of the time, when you see a reversal pattern at a golden area, market will definitely react to it. 85% of the time, market will react to it. So if you have something that works close to 80% or more, then it means it's a very good idea. You see, a lot of traders don't know this secret I have just shared with you. They're only concerned about looking out for the market on the higher time frame. It is when you come to the lower time frame, you will see the secret more. Now, by looking at just one let me clear this one by one. I don't want to clear everything. By looking at this candle, the hours candle, guys, can you see any information right there? No, you cannot see any information right there. Market cannot tell you with this information that it's either it's either ready to come down or it's still going to go up. So there is no information right here until you switch to like 15 minutes, 5 minutes, 2 minutes, or 1 minute. That is when you have more information telling you and revealing to you that this is a valid area. All right. So now for me, I can tell you based on my experience and based on what I've just shared with you guys, market is most likely not going to respect the 50. Okay. The line below is the 50, while the one above is 61.8. So it's most likely going to come up to the 61.8% area. So once market starts approaching the 61.8 area, start looking out for 5 minutes or 1 minute and look out for that reversal pattern. Something like what? Something like this. Let me go back to 5 minutes so you can see something like this pattern. All right. And now, guys, everybody, those of you on the call with me, does this pattern look like this one? Tell me, do they look alike? Everybody, if you're following, I want to be sure you guys are following. Do they look alike? Do they look alike? Everybody on the call, do they look alike? This is a continuation pattern. This is a reversal pattern. See, there are much to learn. Someone said, in drawing the Fibonacci, how do we know where to start from? I'm going to go back there. Okay. Now, look at, this is a reversal pattern. This is a continuation pattern. I tell all our students, the more you learn, the more you know in Forex. But believe me, once you learn all these things, you know it is in your brain. Nothing can take it away. But the time to learn is what a lot of our people are lacking. Is what a lot of people are lacking. Guys, so based on my experience in the chart or in the market, so this tells me that market is still ready to push up some more. So once market start approaching the level, start looking out for something like this, a reversal pattern, something that gives you a zigzag in an uptrend, little by little. So this is where market slows down. You can see we have a sharp push up. Okay, this is a sharp push up. So when we have a sharp movement to the upside or in one direction, it tells us that market is ready to push up. If 50.0 level is going to be a valid area, this pattern will appear around this level. It will appear where we have this 50.0 level. This pattern right here will appear around this place. But you can see where we have the pattern is far, is even very far from 50% level. Okay, and look at the pattern we are having at the 50% level. So this is a continuation pattern, which means market pull up, reverses, okay, then the continuation is going to come. I hope this is very, very clear, guys. If this is clear, please type in clear in the chat. If this is clear, please put in clear in the chat. So if you have any question, let us know. Let us know. So based on the question, yes, George, you are very correct. Bullish flag. We have a video on that on our YouTube channel. We've had series of training so far. So you can go on our YouTube channel, you can learn about flag and all of that. And in our advanced training, we have an in-depth training on all these patterns. In-depth training. When I mean in-depth, I mean it. All right. So look at this is a bullish flag. So the continuation is definitely going to come. We have a training on flag on how you can take a trade with pole and flag. Okay. So based on the question, let's go back to 2 hours. So I think who asked the question? It's question time, guys. Please drop in your question. Okay, Mr. Bassi says, in drawing the Fibonacci, how do we know where to start from? It's as simple as that. Mr. Bassi, take a look at. From here, we have a move down. All right. Market went back up. All right. And now, from this level came down and it broke this place. Since this place, this move right here, broke this level, the break of this structure tells us that this is a valid area where we have to start. The drawing of the Fibonacci. I will take it once again. Let me go back in time. We have a move down to this place. All right, from here to this place. Now this move right here came down and broke this structure. So the break of this structure has confirmed this last high, okay, as a valid area where we should start drawing the Fibonacci. So invariably, we have been talking about downtrend all the while. So you can apply this in the reverse to the uptrend. All right. So when you have good in-depth knowledge about one aspect of the trading, it will be very, very easy for you to understand the other side. All right. So it has two sides, buy and sell. That is just it. So we've been talking about the sell side. So now this structure, this level has been broken by this move. So this is a confirmation that this last high is what we should use. Okay, and as a matter of fact, the last high, once you are drawing your fib for a downtrend, you want to use the last high. So this last high is what we are going to use. So you draw it from the top, drag it to the downside. Then make sure it's in the same line with the last bottom. So from the last high to the last bottom. All right, and draw it to the future. Draw it. So from there, you are waiting for price to come up to either 50 or 61.8. I hope this is clear. I hope that answers your question. So with this move, again, since this move has broken this structure, this is the last high. So we take the last high, draw it to the last low, the last high from here to the last low. So we are waiting for price to come up to we're waiting for price to come up to the right area before we take the trade. So I'm expecting this pair, although I haven't done the in-depth analysis from the top down to be sure that this is ready to keep going down. But by virtue of this move, I'm expecting this pair to come up to 61.8 and react from that level and come down to anywhere, either to break the structure and keep going down. But take note, guys, once market opens by 10 p.m. Nigerian time in the next 1 hour, between now and tomorrow morning or afternoon, take a look at this level on AUD USD at 75.49, which is 61.8. Price is going to react to that level. All right, and if it does not react to that level, it's going to come up to 78.6. But I strongly believe it's going to react to this level and drop some more before the push-up is going to come. Okay, but based on this big move right here, I'm still convinced this is going to keep going up because this is a sharp move to the upside. This move from this top, this bottom right here to this level is a sharp move. So when you see a sharp move in a direction, be careful. Okay, it tells you that market is most likely going to keep going up in that direction. That is another top secret I've shared with you guys. All right, we have a lot of to share and we'll keep sharing that often and often. So if you have gained some value today, please let me know in the chat. If you have gained some value, please let me know in the chat. If you have any question, please let's have it. If you have any question, let's have it. Let's have it. Let's have it. If you have any questions so far, guys, please feel free to drop your question. And for those of you who are with us right now on YouTube, do not forget to click that subscribe button and ensure you activate the bell icon and click that thumbs up button. Drop your comment in the chat below. All right, and feel free to explore our channel for more videos. So guys, let me know if you have any question in the chat. Our training is almost 1 hour, so and we pledge not to take this more than 1 hour. We don't want to bore you guys with more informations. So in the absence of no question, type in no. Okay, if you have a question, put it in the chat. In the absence of no question, everybody type in no in the chat. Type in no in the chat. In the absence of no question, type in no in the chat. Okay, let's be sure. Okay, we're on the same page. All right. Thank you so much, Dami. Appreciate you so much. And I think we've come to the end of today's class, and I'll be glad to come up to be here with you guys the same time next week to give you an exciting topic. And we'll be sharing another strategy with you. For those who care to take the strategy, it's going to be a public strategy, and probably it's going, okay, that's going to be a private recording. It's going to be on our YouTube channel sometimes during the week. Okay, it's one of the strategies that newbies can use, even the intermediates and all of that. And this is basically for those of us who are busy. You can just look out for the for the uh for the conditions. Once a day, take your trade and go. All right. So thank you so much for having me, guys, today. Yes, Mr. Basi, the recording, the replay will be available sometimes during the week. All right. And for those of you who have missed the part one and part two of market structure, go on our YouTube channel. It's right there. Just look for market structure part one and two. So you can start from part one and two, then you can have some in-depth knowledge of what we've been talking about. So in the next couple of, probably in the next 2 weeks, we're going to continue with the part four of this. Okay, this is going to take us to either 6 or 7 before we switch into another part. All right. So much, guys, for having me today. I celebrate you guys for being here. This is just the sign of commitment. It is only when you're committed to learning that is when you have the right to make money in this business. When you're not ready to commit yourself to learning this business and you want to make money, believe me, you are taking the wrong path. But once you are ready to take it upon yourself, give yourself some time to learn and learning the right way and put whatever you've been learning into practice. That is another thing. Put whatever you've been learning into practice. Believe me, you are very close to making money in the business. And if you have been trading before, you're not making money, you probably need some mentorship and someone to hold you by the hand. That is what a lot of people need. Okay, a lot of people know how to trade, but they are lacking one or two things to make them be consistent. Mentorship may be the thing you need to keep making that money and keep uh keep the money to yourself. So thank you so much, guys, for having me. I celebrate you guys for being here. I'm going to see you guys on the group. If you have gained value tonight, let's go on our general Telegram channel. Let's type in whatever value we have gained tonight. And if you have not gained any value, put it there. Your comments will only help us to get better. All right. Thank you so much. I appreciate you guys. See you guys. See more of you guys on the group and see more of you next week. Bye bye and have a lovely week ahead. Bye bye and God bless.